Boom! What's going on, Investomaniacs? Your boy Knight Rider here, and I've been concerned about the stock market. I think maybe it's a little higher than it should be, but in particular, I think there are some individual stocks that have ran way too much, and I've been looking for a way to protect some of the recent gains I've had in my portfolio through changing up some of my longs and also potentially or adding in a short. And one of the stocks I was thinking about shorting was AMC. Now, I made a video a couple days ago saying how I didn't really like AMC, but I wasn't exactly thinking about shorting it until Kyle made a comment that said, I'm confused as to why it's rallying upward just off of rumors of a small portion of theater openings. It's very confusing right now. Not sure if I'm witnessing a pumper dump or not. And that made me look at the stock and realize, oh, wow, this stock actually has ran a lot. It didn't really hit me until I saw that comment and went back and looked at it again and actually calculated the numbers. And I'm like, oh, this actually has ran a lot more than I realized. And it doesn't make sense. I do think a short would be appropriate here. And so I started doing a little bit of research. I ultimately killed the research halfway through because I called up TD Ameritrade and there's no shares available to borrow. I couldn't see it online because it's a weekend, but I called them. I'm like, I don't want to do too much research on this thing before I know for sure if I can actually short it. So once I realized I couldn't short it, I just stopped my research. But this is what I kind of put together up until I stopped. It's kind of not necessarily in order, but I just wanted to go ahead and share the information that I had with you guys. So just from a practice standpoint, you can see, do you agree with me? Do you think the short would make sense, or do you think I'm missing something and the short doesn't make sense? So again, not necessarily any random order. The stock, or the theaters, they shut down a couple months ago. Stock plummeted because they might go bankrupt, and then they announced a $500 million offering that was going to bear an interest rate of 10.5%, which is a very high interest rate. That means people don't really trust your debt that much, and it's a lot for a company that already is having trouble paying their debt obligations and turning a profit to just add on more debt at a high interest rate. So that's pretty bad for them. But as it did at least temporarily take away bankruptcy concerns, the stock did roar upward on that. Then, just 3 days ago, on June 3rd, they announced a 12% second lien secure note, and this was an exchange offer, which is kind of like a debt restructuring. So this is bad for the people who have the debt. Basically, it means that AMC is not confident that they can pay their debts. They're trying to restructure it and essentially cut the debt holders' value in half. So S&P downgrades AMC Entertainment, calling new debt swap tantamount to default. S&P Global Ratings has downgraded shares of the theater chain AMC Entertainment would be tantamount to default. It's basically because they are offering investors a swap that requires them to take a cut of 50%, roughly of about 50% of the face value of existing debt. The rating on AMC was lowered to CC. S&P also placed its C rating on AMC's subordinated notes on so-called credit watch negative because it said it would lower the rating to D if the proposed exchange was completed. Because again, once you default on your debt, typically more people aren't going to want to buy your debt, and it's going to have an even higher interest rate because it's riskier debt because you've defaulted on your debt, right? So it's going to make it even harder for them to get money in the future, which they may very well need. AMC announced plans to launch an exchange offer for 4 sets of subordinated notes with new notes. 3 of these sets, which are dollar denominated, are trading at deeply distressed levels in the range of 26 to 27 cents on the dollar. So pretty much nobody really likes this debt. California Governor Gavin Newsom announced guidelines for restarting film and TV production on June 12th if local conditions permit, which again, it's June 6th. That means with all this trouble that AMC is having, by the way, there's been no TV or film production for the past couple months, and there isn't any still to date, and it's not like it's magically going to pick up to 100% output on June 12th. So the hard thing about AMC is even if they open, they might not have movies to show. Press release. AMC Theaters responds to Universal Studios' comments about simultaneous theatrical and home release. For much of the past 4.5 years, I have been in direct dialogue with Jeff Shell and Peter Levinson of Universal about the importance of a robust theatrical window to the viability of the motion picture exhibition industry. Throughout that time, AMC has expressed a willingness to consider alternatives to the current windowing strategy common in our industry. Again, that's showing weakness on the part of AMC. They're saying, hey, we're willing to kind of renegotiate. Universal stated it only pursued a direct-to-home entertainment release for Trolls World Tour because theaters were closed and Universal was committed to a lucrative toy licensing deal. We had our doubts that this was wholly Universal's motivations, as it has been a long-standing desire by Universal to go to the home day and date, meaning Universal wants to simultaneously release in theaters and direct to consumer, which would be very bad for AMC. And AMC is saying, hey, we kind of think that maybe we're testing this out because you actually want to do that. And that ended up kind of being true, because in today's Wall Street Journal, Jeff Shell is quoted as saying that, quote, the results for Trolls World Tour have exceeded our expectations and demonstrated the viability of PVOD. Mr. Shell says, quote, as soon as theaters reopen, we expect to release movies on both formats. And then, which is, I mean, that's a kind of a knockout blow from Universal to AMC, and AMC responds by saying, quote, this radical change by Universal to the business model that currently exists between our two companies represents nothing but downside for us. I want to say that again. AMC says this represents nothing but downside for us, meaning the best possible outcome is nothing changes, in which case the valuation of AMC would not change on this front. But guess what's going to happen? They're going to have to come back to the renegotiating table, and it's going to end up worse for AMC. I can almost guarantee it. Going forward, AMC will not license any Universal movies in any of our 1,000 theaters globally on these terms. Again, that means there is no longer an agreement between AMC and Universal. They're going to have to renegotiate, and guess what? It's going to be towards the direction of what Universal wants and not in favor of what AMC wants. AMC is willing to sit down with Universal to discuss different Windows strategies and different economic models. Again, this is them capitulating. They're throwing up the white flag. They're saying, hey, we're willing to renegotiate. Well, that's going to be to the benefit of Universal and to the detriment of already struggling AMC. In one of their regulatory filings, AMC says, quote, during this period, we are generating effectively no revenue. They list some problems with their business and say, due to these factors, substantial doubt exists about our ability to continue as a going concern for a reasonable period of time. AKA, they're telling you in their regulatory filing, we might be committing bankruptcy. Another press release by AMC. This is just for their financial results, which is going to be on Tuesday, June 9th. It's currently Saturday, June 6th. So you have, kind of Monday to potentially get in and buy or sell this stock. I liked the idea of selling it because this is going to be a horrible quarter. There's going to be no good news. It's going to all be bad news. The analysts are going to hate it. They're going to be throwing really hard questions at these guys. And if I had to guess, if I were a betting man, I'd bet the stock's going to go down on this quarter because it's going to be all bad news. And yet the stock has been soaring into the quarter. So I like the risk-reward setup right here. We'll kind of come back to that in a little bit, but just take a quick visual look at this. So this is where we are right now at 591, and this is about the mid-range of kind of where we were pre-COVID, roughly 685-ish. So we're getting pretty close, right? We're about 15, I think I did the math, that's like 18%. We're about like 18% off of the mid-range of where we were directly pre-COVID. But remember this has been in secular decline for years. All right, we used to be up at 35, now we're at $6. So either way, I mean, we're probably going down, but I think this is from a timing standpoint, a good time to go ahead and short the stock. So here's a little bit of math. Current price of AMC shares $5.91. Some recent highs average out to about $7.61, which means that represents about a 29-ish% rise to go to the recent highs. However, the low was at $6.35, or the recent lows, which gives us a mid-range of just under $7, represents about an 18% increase from our current share price to go up to where about the mid-range trading range of where we were in the 2 months preceding Corona. But obviously the stock is worth less now. So how much less? Well, that's up for debate. But let's just be conservative. Let's give a number that I think pretty much everyone can agree with and say the company should be worth at least 10% less. I mean, that's being generous, right? Okay, so let's go with that. Let's say that the stock is worth 10% less off of its mid-range number, which was $6.97. Take away 10%, you're going to be left with a stock price of $6.28. The current stock price is $5.91. That gives us a short. If we short, the stock maybe would go up approximately 6.3%. That's our downside for shorting the stock. Now, obviously, I'm not saying noise and trading can't take it up more than that, but I'm saying if I had to estimate the downside for a short, it's probably about 6.3%, and then I still think it will come down after that. So let's go ahead. And so my point is, I think there's a lot of upside potential for a short, whereas it's relatively minimal downside at this point, in my opinion. Let's go ahead and just recap the negatives real quick. Increased debt burden for a company that was already having trouble paying its debt and maintaining profit. Potential debt restructuring, which would result in further downgraded debt ratings, making it harder and more expensive to get more debt. An estimated over $2 billion loss for the quarter. There is still no open dates for their theaters, so we don't have any good news. Maybe they'll announce that on the quarter. I don't know, but we still don't have a date for reopening, except for Norway, I think it is. Worse debt leverage with movie studios, or not debt leverage, worse leverage. Again, so they're gonna ultimately probably come back to the negotiating table with Universal. I can almost guarantee you it's going to result probably in a shortened window of exclusivity, or it maybe could be a higher percentage that AMC gets to keep, but it's not going to be exclusive. Either way, it's, in my opinion, going to end up being in a worse situation for AMC. I don't see any possible way that AMC comes out ahead. The best possible situation is they come out break even, but I'm definitely willing to bet money that they're going to come out worse in this situation. Decreased capacity when opening. Again, when they do open the theaters, probably not going to be at 100%. And when they do open, there's going to be some percentage of customers who are not going to want to come back and or aren't going to come back as often and or will cancel their AMC Stubs A-list membership. And even if they do open, they may not have movies to show. So even if people do want to come, they might just not have the movies for several months, and that's going to create an issue for a company that is having solvency issues. And then also Q1 is going to be awful. There's going to be no silver lining, and we have been roaring into Q1, which I think from a risk reward standpoint, a short makes sense here, but I called my broker and my brokerage account, and there's no shares available to short. So I kind of just stopped my research once I realized I couldn't short it. But let me know what you think. Do you think the short makes sense? Would you like a short if I could short it, or do you think I'm missing something? Let me know what you guys think. Hope you guys have a great day. Peace.